Hello and welcome to Dynamic Trader Tutorials, the price series. This is tutorial number 3, the mystery retracements. Identify reversal targets in advance with external retracements. In this tutorial, we're going to learn how external retracements identify high probability price targets in advance for trend reversal. Here's Robert Miner, founder and president of Dynamic Traders Group, to get us started.
Hello, I'm Robert Miner, the founder of Dynamic Traders Group, and welcome to our price tutorial. This tutorial I call the mystery retracements, or how to identify trend reversals with external retracements. Now, most traders aren't familiar with external retracements, and after this tutorial, you're going to know exactly what they are and exactly how we use them to identify the end of a trend or a counter trend. So let's get started. Let's learn what an external retracement is, how you do an external retracement, and then you'll learn the particular situations where the external retracements are valuable. Let's get started.
Okay, let's get started by taking a look at how we make external retracements. As you know, internal retracements are less than 100%. So external retracements are retracements that are greater than 100%. The 3 external retracements typically used, especially with our approach, are 127%, 162%, and 262%. External retracements are used to help identify in advance price reversal targets for any market and any time frame.
Most traders are familiar with retracements, price retracements. And in parts 1 and 2 of this tutorial series, we talked a lot about retracements, but the type of retracements we taught in part 1 and 2 were the internal retracements, and those are the kinds that most traders are familiar with. So what's an internal retracement? That's a retracement that's less than 100%. And let me just put those on as a quick review, even though I'm sure you're familiar with them. There I've put on the 50, 62, and 78.6% internal retracements retracing from this low to this high. And that's what most traders are familiar with, although a lot of you may not be familiar with 78.6% retracement, which is a real important one in the financial markets. So if you're not familiar with it, I strongly encourage you to be sure and take parts 1 and 2 of this series, because we describe that retracement and why it's important. Well, that's internal retracements, the kind of retracements that most traders are familiar with. All internal retracements are less than 100%. Well, in this tutorial, we're going to teach you about external retracements. So, what are external retracements? External retracements are greater than 100%. And that's a concept that some traders have difficulty grasping. How can a retracement be greater than 100%? Well, a retracement can be any number. So it can be greater than 100%. And if it is greater than 100%, then that means it's going to retrace back greater than the entire range and continue beyond the range of what we made the retracement from. Well, let's illustrate that so you can grasp what we're talking about. First, I want to show you how the Dynamic Trader program does retracements, because you'll see me doing these throughout this tutorial as well as the tutorial series. I've brought up our retracement menu, and in the retracement menu we're able to choose whatever ratios we want to choose. We can choose whether the line is thick and thin, and we can choose the color of the line. So what are the ratios we use for external retracements? Well, there's 3 main ones we use, and it's 127.2 or 127%, 161.8 or rounded up to 162%, and the 262%. And I think so we can easily identify these, particularly if we have some internal retracements or alternate price projections on our chart. I'm going to make them all a green color. I'm going to make their lines thick. So that's how Dynamic Trader sets up retracements. You can use any ratios you want. You can add any in if it isn't one of the default ones we have in our list. And then you can do the retracement by range, by percentage change. You can do it by the high and low of the bars or by the closes. And then you can display the labels if you want. And that's what we're going to be doing, is displaying the labels and all the reference lines. So we've chosen which retracements we want to use, and it's 127, 162, and 268. Now those are all greater than 100%. So I'll click OK, and let's measure from this low to this high and have the external retracements on the chart. And let me just bring the data up so we can see all three of them that we made. Got to get down there a ways for that 262. So we've measured from the low to the high. Now that range was 14.62 points. By the way, this is S&P, SPX, the cash S&P daily data. And of course, everything we're going to teach you, you can use on any time frame, any market, whether it's day trading the Forex or the indexes or position trading stocks or mutual funds, whatever. It's all applicable. So we've done the 127, 162, and 262 retracement of this rally, and because they're greater than 1, greater than 100%, they're considered external retracements. And how Dynamic Trader displays it, it gives you the exact price, the type of price projection that you made, in this case it's a retracement, and the exact ratio that you made. So that's how we do the retracements, and those are the three primary ratios that we use. And as you'll see, we're going to be looking most of the time at the 127 and 162%. The 262 is for particular conditions. And we'll get into all of that throughout the tutorial. But these retracements, external retracements, frequently are support, resistance, and targets for trend reversal. Now, we never use external retracements by themselves to identify support, resistance, or trend reversal. They're used with other price projections, but first we want to see the peculiar use of the external retracements, how we make them. We're going to look at a number of markets, and then we'll also see how we integrate them with other price projections and some other techniques we have to see how valuable they can be. So let me just, I'm in the training mode in Dynamic Trader, so I'm going to add some bars on the chart. There we had a bar, went right down to the 162, and we'll add some more bars, and we had a big, wide range outside reversal day right from the 162 external retracement. I'm just going to erase the 262. I'm going to move the data so it's displayed a little better. And with this wide range day, you can see that this looks like what's a real common sort of ABC type pattern. So in further sections in this tutorial, we're going to describe how these external retracements are primarily used with particular patterns. But it's real common for a wave C to terminate either near the 127 or the 162 external retracements. So that's how we make the retracements. Let's go on and look at some other examples just so we firmly understand how the retracements are made.
Well, let's look at some more examples of external retracements. Remember, external retracements are quick and easy to make. However, you can keep them organized by color-coding each type of price projection, including internal, possibly in blue, external, possibly in green, retracements, and alternate price projections, possibly, say, in red. All in different colors, so they're easily distinguished on your chart. Remember, reversals are not always made precisely at one of the external retracements, but they're typically made within a few ticks. You'll also learn in this tutorial how we add other factors to identify if a reversal is probable once the price reaches the external retracement.
For our next example, let's just continue on with this S&P daily data by adding bar by bar and doing the external retracements and see if they were support, resistance, or trend reversal if the market reached those retracement levels. So that first example we saw how we did the external retracements of what I've labeled a wave B. And the bottom was made right around 162% external retracement. Well, once we take out this, what I've labeled a wave B high, that's an indication that the market's going to continue to advance. So let's do the external retracements of this entire decline. Well, in DT we can just choose them really quick by clicking on external, and I've got the set already set up. And that's set up. Ooh, I had them blue instead of green, so let me just go ahead and change that color so we keep consistent with our color here. We have a dark green, and there we go. So now we have them the same color as our other external retracements, and we'll try and keep that consistent throughout the tutorial. And we'll make this line thick. So there's our 127, 162, and 268 external retracement of this decline. So it's basically measuring, I'll take those two markers off. This was a 30.06 decline, and what the program has done is multiplied 30.06, that's the range of the decline, by these ratios, and then projected it from the end of the range. So that's the 127, 162% external retracements. Now I'm going to, just so we can see the bars better, I'll expand it up just so we see these first two. And if we get beyond the 162, we'll look at the 268. So let me clean the chart up a bit here from the last time. We don't even need any kind of labels on here. We're not doing Elliott wave here. So let's advance the data, and there's a high probability that we'll have a top either near the 126 or the 162. So let's add some data. We've just closed above the 127, and so we'd be looking at the 162 for high probability for resistance. Now, as of the last bar in the chart, it's just slammed against this daily data, the 162 external retracement. Had a snapback reversal day, markets come down strongly, very strongly. So you can see once again, we made a high right near the 162% external retracement. Now, do you think that would be useful to be aware of these external retracements in advance, ahead of time, as probable support, resistance, or trend reversal? Now, of course, every trend reversal isn't going to be made right at one of these external retracements, but once we add some of our other price projections and some momentum reversals, we're going to be able to qualify out when a market gets near one of these external retracements if it's going to be support, resistance, or trend reversal. Let's look at another example. We know how to make these external retracements now. Let's look at another one to make sure that this is just second nature to us. This is 60-minute data S&P. So we have a decline, we have an advance, we have a market that's come down and made a new low below this swing low, just slightly, but now is when we want to do our external retracements of this advance. So let's do those. Let's make sure we got our external retracement set. You know what I'm going to do? I'm going to make sure that we have them green. I need to reset those and save them as a green color. We can do that pretty quickly. And I'm going to do save set. Okay? And we want to save it as the external retracements. There we go. So let's do the external retracements on this 60-minute data, and we're doing them because we made a new low. So we've got a decline, a rally. These are potential support areas if the market continues lower. So let's add some bars on. Boy, it just went right through the 127, came right down to the 162 external retracement on this 60-minute data. Let's expand that chart a bit so we can see it real clearly. Let's add some more bars, poke below it, slightly below it by 1 bar, and came right back up. We're still right around that area. And see how many bars it hung right around that area of the 162 external retracement? Let's add some more bars. Popped right up. So again, right near the 162, external retracement is where the low of this market was made and the market came back up. So it was very significant support, and we were prepared in advance by having done our external retracements. So now we've just seen a couple markets, 2 or 3 examples on how we do the external retracements and how they are frequently support and resistance when a market reaches them. Let's go on to the next section and learn what types of patterns typically complete at or near these external retracements.
Let's take a look at types of patterns and external retracements. Now remember, external retracements help identify the price target to complete the last section of a trend or counter trend. That last section is often made at either the 127% or 162% external retracement. We want to identify the end of a correction in order to place a trade in the direction of the trend. We want to identify the end of a trend in order to either cover a position or to trade in the direction of the new trend. Now, using external retracements, we can consistently identify in advance the probable target to complete a trend or counter trend. Let's take a look at some examples.
So when are external retracements primarily applicable? There are certain conditions they're particularly applicable to, and those are the final swings in a trend or a counter trend. Well, what do I mean by the final swings? If we have a correction, let's say we have this is the S&P 60-minute data. Let's say that we believe this decline on this 60-minute data is a correction. The last low is likely to be made on or near the 127 or 162% external retracement. In this case, maybe it's going to be like a nice ABC low, a corrective low. Now, if this were a bear trend and not a correction, but a higher time frame or larger degree bear trend, then more than likely the 127 or 162% external retracement would not be relevant, would not be support in this case, or a trend reversal low. So if it's a correction, then the external retracement of 127 or 162 has a high probability of completing the final low. So we've made the external retracements of 127 and 162. Those are relevant if we believe this market is in a higher time frame bull trend and the market is making the final swing down in this correction. So we'll just add the bars on. Now this is an example that we had in the last little section, and see how it traded in a range around the 162% external retracement, then went on to make a new high. So this correction was completed around the 162% external retracement. Now, if this market, we believe from our trend or momentum or pattern studies, was in a bear trend, then more than likely neither of these would be relevant or be support or trend reversal targets. So that's the condition. Corrections are frequently terminated right near the 127 or 162% external retracement. Now, for some of you who may be familiar with like Gartley's and butterflies, this is also a Gartley pattern. A Gartley pattern is an ABC type correction, 3-wave correction. In Elliott wave terms, it's an ABC. In other pattern recognition terms, it's called a Gartley. So that's how you can relate these 127 and 162s as the end of a correction like an ABC or a Gartley. And then the higher time frame trend typically resumes. Let's look at another example. How about the quadruple Qs? This is the daily data of the ETF. That's the used to be the triple Qs, now it's the quadruple Qs. If we believe this market is in a bull trend and the decline off the high is a correction, there's a high probability that the final swing down to make the last low of the correction will be very near either the 127 or 162% external retracements. Just checking to make sure those are the ones I got. We'll make our external retracements of that last swing up. And again, I'm demonstrating this out of context of any sort of trend filter or momentum filter that would indicate that we're going to continue the bull pattern. And we'll get into that in the sections that we're coming to. But if we believe this market's making a correction, there's a high probability that the low is going to be made at or very near one of these two external retracements. So let's add some bars on. Huge wide range reversal day as of that bar right at the 162 external retracement, and the market went on to make a new high. So the final corrective low was made almost to the tick of the 162% external retracement of this last rally. So those are a couple of the situations for corrective lows. Now let me show you a couple situations where the external retracements are particularly applicable to the final higher low of a trend, otherwise the last swing of a trend. So let's look at a couple stocks. And let's look at AA, American Airlines. And the stock had been in a significant bear trend for many months. Let's say that our higher time frame, larger degree trend analysis indicates that it's coming in near the end of this bear trend. So if that's the case, typically the last section of the bear trend, the last section down, will typically be complete at or very near either the 127 or 162% external retracement. So let's make those, and we'll make them from the low to the high. And as of and I want to keep all those bars on so you can see this was a significant bear trend. It wasn't just a correction. So we're looking at a bear trend, and for those of you Elliott wave people, it's like a 1, 2, 3, 4, 5, and I realize that the wave 4 is potential wave 4 is overlapping the wave 1. Well, that happens a lot with stocks. We don't get the ideal Elliott waves. But again, we don't have to be thinking of Elliott wave. We only have to have some indication that the market is making the final section down in this bear trend. It will more than likely be complete either near the 127 or the 162% external retracement. So we measured from that low to high. Then we did the external retracements. As of the last bar in the chart, it's been several bars right at the 127. So more than likely, this bear trend is going to end right around here or right around the 162. Let's add some more bars. Continues lower. As of the last bar, it's just tagged to 162. Let's add some more bars. Went right below it. It's hovering right around it. It's been below it for a couple bars. Looks like it's working its way up, so we'll keep adding some bars for a while and see if, there we go. Looks like very significant support right near the 162 external retracements. I'm not going to add some more bars because we've already made that significant advance. And it wasn't made exactly at it. We had 3 bars that poked below it. It looks like we had 2 closes below it, and then we had an outside, actually it looks like, an outside key reversal day back up above it. So it was right in either the 127, and we can see how the prices hovered around there, or the 162 was more than likely going to complete this bear trend, and it did complete it right near the 162. So let's look at another example, and let's use another stock, because again, this is applicable to Forex, to indexes, to commodities, individual stocks, mutual funds, sector funds, whatever. So let's go under the assumption right now that this bull trend is at or near completion, and we believe that this has a possibility of being the final advance in the bull trend. Once again, we're looking at the external retracements out of context of our trend and momentum analysis and pattern analysis, all that sort of thing. Well, as of the last bar on the chart, this market is tagged to 127. If it exceeds the 127 external retracement, more than likely this bull trend is going to complete near the 162% external retracement. So we're going to give you some tools to determine which one that would be a little later in this course, but right now let's just add some bars on. Inside day, wide range, reversal day, and outside reversal day down, the market continues lower. Oops, I hit the wrong key there. So add some more bars and just see whether that completed that bear or bull market. Look at that, we came up and tagged it again exactly, and then went down really strongly. Had a double top right on the 127% external retracement of this last little swing down. Now, just because it hit that at this time wasn't the indication the bull trend was over. The bull trend would probably complete on or near the 127% or 162% external retracement of this last swing. Okay, so again, we're going to integrate trend analysis, momentum analysis to help us determine if it's in the final stage. And if it is, that's probably where it's going to end. And bingo, we made a double top right at the 127. So can you see how valuable this would be to identify the end of a correction and the end of a trend? And it's very valuable if we use these correct ratios for external retracements in the right conditions at the right time.
Let's see now how to identify which external retracement or retracements will complete a trend or countertrend. In this section, we're going to show you how to identify in advance which external retracement should complete a trend or countertrend. As we look at the external retracements, the momentum position will help us identify which external retracement is likely to complete a countertrend or trend reversal. We can also use other projections such as internal retracements or alternate price projections to help us identify in advance which external retracement should complete the trend or countertrend. Let's take a look at some examples.
Well, now let's see how we can integrate some other price analysis and some trend or momentum analysis to help us identify whether the market's in a trend or a counter trend, or which of the external retracements is most likely to be the end of the trend or the counter trend. Well, let's go back and look at some of the data we've already looked at and add some more pieces to the puzzle here. So we're back with this quadruple Q daily data, and the market is declining. We still have on these external retracements that we looked at earlier. Let's go down first to our intermediate term momentum studies. Now, in this momentum study, I used the DT oscillator. And by the way, we will be having another full tutorial series just on multiple time frame indicator or momentum studies on how we integrate them into our trading strategy. But for right now, I know most of you are familiar with oscillators or indicators or momentum studies. They're all the same thing basically. And if we have a momentum indicator that's in the oversold zone, then more than likely, at least when we're using the DT oscillator, more than likely the market is at or very near a low that's going to then make a reversal and continue the prior trend. So if we're making a corrective low, our momentum study is saying we're near the corrective low. Our price external retracement studies show the two external retracements below the market. Now let's add one other thing in. Let's add our alternate price projections in. Now we taught you all about alternate price projections in the first two tutorials of this series, so I'm not going to go through the details, but the 100% alternate price projection is almost overlapping with the 162% external retracement. So of these two external retracements, more than likely the one that's going to complete the correction is the 162% external retracement, because we have another price projection from a completely different perspective falling near that one and not the 127. Let me go ahead and just put our internal retracements in. And we've got the 38% internal retracement that's falling kind of right in between the two. So what all that tells us is that within the wide zone of the 127 to the 162, we have the support to complete the correction, but it's actually a little closer to the 127, but the 100% alternate price projection is a little more important. That's why it's in bold and red. 38% retracement is less important. That's why it's a thin line. So if nothing else, we know right now that the extreme of this correction should be near the 162% external retracement. We have that from our price analysis. We have it from our unique external retracements that usually terminate a correction. And then we have our momentum study saying that this market is at or near a corrective low. So let's go ahead and add some data on, add a few bars on. And there we had that wide range outside reversal day right at the 162% external retracement, which in advance we confirmed was the high probability target to complete this corrective low by our alternate price projection and by our momentum study, which is indicating we were coming into a low that was likely to last several weeks, because this momentum indicator only makes reversals at kind of the longer term highs and lows. So that's how we integrate some other of our price analysis and momentum studies to help us pinpoint which of the external retracements is likely to be the support, resistance, or trend reversal. Well, let's look at another example that we looked at earlier. And this is AA, the daily daily data for the stock. And we're back to where the market has declined to the 127% external retracement, and the 162 is below that market. So let's just add a couple things that help to qualify out which one of these external retracements is liable to complete the bear trend. And remember, we're assuming that this is in the final stage of the bear trend. Now I've got our DT oscillator momentum indicator up. And as of the time that this market reached the 127% external retracement, this momentum indicator was still bearish. And only one of the lines had reached the oversold zone. And usually we want both of them deep in the oversold zone before we didn't want to do that. There we go. Just hit the wrong key. Just want to get the date out here. They need to both be in the oversold zone before the market is at or near a momentum low. So let's just add, I want a little more data on the chart. There we go. I'm going to do an alternate price projection of this last swing. And the 100% alternate price projection, I've just measured this swing and then taken 100% of the range decline from this high, is right near the 162% external retracement. So just by adding that one additional price projection on, it would indicate that more than likely the low would be made near the 162 and not the 127. And plus our momentum study is indicating that the momentum is not yet near a low. So we have a high probability that at the very least this bear trend is likely to be over and not go any further than around this 2324 to 2282 area, right around the 162% external retracement. And we've done that in advance. We've looked at our momentum study, we looked at our price study, and we've keyed into the external retracements because we believe this is the last section down in a bear trend. So let me just add some bars on here. We've got now both lines of our momentum indicator deep in the oversold zone. We should be very near the final low of this section down, and we're just above the 162% external retracement. So we add some more bars. Actually, as of that last bar in the chart, we've tagged the 162% external retracement, which is right near the 100% alternate price projection, and we've made a bullish reversal in our momentum indicator. More than likely, this market has not just made a low that's going to last a few days or a couple points. Remember, we're using these external retracements and our other tools to identify the end of a bear trend going all the way back at least to, in this case, it'd be around November, and we're now in October, almost a year ago. Now, do you think that would be valuable if you had been short this market, or you were interested in being long the market, to have these tools focusing around the external retracement to identify the end of this entire trend? How valuable would that be to you? Well, it can be really valuable. They were hovering right around that area, and we're adding data. We're going to add some more data here. And as we know from the prior example, when we only looked at the external retracement, that was the low of that bear trend. Okay, I'm not going to add more bars, but the market went up considerably from there. But we were prepared in advance that the final low would be right around the 162% external retracement. And boy, what valuable information this is, because like everything in dynamic trading strategies, we're prepared in advance and we identify the price area in advance, the high probability price area for support, resistance, and trend reversal, and we integrate the other tools, whether it's momentum and pattern and timing, to build a whole picture of high probability support, resistance, or trend reversal.
Now, one of the ways we can get even closer to a reversal is to use dual time frame momentum position. The momentum position will identify if an external retracement is likely to complete the trend or counter trend. We always identify the smaller time frame external retracement and momentum position to provide the early signal of the larger time frame reversal. Look at it on the smaller, signal on the larger. We can use any momentum indicator, and this process can be used with any market and any time frame. So let's take a look at using dual time frame momentum position with this particular approach.
Well, let's take a look at some Forex data, some intraday data. And we at Dynamic Traders, we love the Forex market because it makes such beautiful patterns, and highs and lows just frequently dead on our price projections. So I've got the 60-minute data up for the euro dollar, and this is the Forex 24-hour data. Now let's look at as of the last bar in this chart, and this example is only a couple days old. Excuse me. We have the Forex data every day in our daily DT futures and Forex report, and we just love the way that it makes its reversals right at these targets. So as of the last bar in this chart of the 60-minute euro currency data, the market has reached the 127% external retracement, and a ways below that market is the 162. Now, is the market likely to make the low at the 127 or 162? We're assuming it's going to make a low at or very near one of the two of these. So let's look at two things and how we qualify out in advance which of these two external retracements is likely to complete this decline. So first, let's look at momentum study. And this time I just have the MACD up. Everybody's got MACD in their software programs. Not everybody has Dynamic Trader and has the DT oscillator. So what's the position, momentum position of the MACD as of the last bar in this chart? Well, it's just gone over the zero line and to positive, to being positive. So if the momentum has just turned positive, then more than likely this low is going to be made around the 127% external retracement and not continue down to the 162. So just with that little piece of information itself, we have a tremendous amount of information that says more than likely, as of the last bar in this chart, the Forex is at or very within ticks, very near of the low of this decline before it completes the bear trend and makes a reversal. Now again, trend is relative. This is only 60-minute data. But if you're a short-term trader and just hold positions for a few hours or a day or two, this is extremely valuable information. But we can get even better than this. Let's go down to a smaller time frame, 15-minute data. And look at, we're going to have data that's as of the last bar on this chart. So as of the last bar on this 15-minute data, it's the same as the last 60-minute bar. Now let's do the external retracements, so I've already done them here, of this last rally prior to the new low. And here's the 127 and the 162. Now we're already poked well below the 127, almost to the 162. Where's our momentum on our MACD? Well, it's still negative. It's still making lower bars, and it definitely has not come above the zero line, which is the real signal that the momentum is turned positive when we use an MACD. So let's go back. I'm going to go back to this 60-minute chart, and we can see that the 127 external retracement, which if we're just looking at the 60-minute chart, is more than likely going to be the extreme of this decline, and it's at 119.44. Now let's go to the 15-minute, and we see that the 162 smaller time frame 15-minute external retracements around 119.42. Now that's just 2 pips from the 127 on the 60-minute. So more than likely we're at or very near the extreme, but let's let the market tell us if it's going to make its low near the 162. And it's going to tell us by, we're going to watch the momentum. Let's just add some bars on. Momentum's still negative, even though we had an up bar. Momentum's still negative. It's still negative. It's pretty flat there. Now we can see the bearish momentum is slowing down because the bars are getting shorter. We're not going to go into an explanation of MACD, but that's what it means. There, as of the last bar, 15-minute bar on this chart, we've got a low. Let's just see exactly what that price is. Yeah, I got that. 119.43. That's exactly right between the 119.42 on the 15-minute and the 119.44 on the 60-minute. And we now have 15-minute positive momentum. More than likely, this market has completed at least this section of the bear trend. How would you like to know that this whole bear trend is likely to complete, and know that within 1 or 2 15-minute bars and within just a few pips? You think that would be useful information? And that more than likely this market is now in a position to make a rally that's going to be quite significant, maybe even make a new high. Do you think you could trade that profitably? Let me add some more bars on here. So now it depends on your time frame of trading, but do you think that was valuable information to have? It's all done in advance. You know, this isn't after the fact sort of thing. I'm teaching you how to do this analysis and identify high probability reversals in advance by using external retracements and our other tools. Quick review. 60-minute came down to the 127% external retracement. Is it going to make the low near that or the 162? Our 60-minute momentum says more than likely near the 127, not the 162. But let's go down to the smaller time frame to confirm it. We go down to the 15-minute data, and as of that time we have the 162% external retracement, only 2 pips from the 60-minute 127 external retracement. More than likely somewhere around 119.42 to 119.44 is likely to end this bear trend that's been going on for days or even weeks. And we verified that. We wait until we had I'm going to just adjust the chart here so we can see the momentum signal. We waited until bang, that bar, we had our momentum signal with the low 1 pip off of the 162% external retracement on the 15-minute and only 1 pip off of the 127% external retracement on the 60-minute. We were prepared in advance, then we let the market give us the signal. Do you see how valuable these external retracements can be to identify the end of a correction or the end of a trend and to give us setups with very high probability, very low capital exposure?
Well, when we have all these external retracements, it's hard to decide which one to use. Internal retracements and APPs help us identify the external retracement that we should use to trade. What we have to do is identify which external retracement is likely to complete a trend or counter trend by the position of the internal retracements and alternate price projection. Now, the momentum position will also signal if a market is likely to make a reversal at the external retracement target. No other approach to trading consistently helps you to identify the probable target area to complete a trend or counter trend. So let's take a look at an example.
Well, let's take a look at a gold futures example. Gold market's another great trading market because it does great patterns, tends to make highs and lows right at our price projections. Not all the time, but most of the time. But again, we're going to be looking now, how do we look in advance, not after the fact examples, in advance in a logical pattern or logical progression of thought and analysis to identify if a market's at or near a reversal. Well, this is the gold market. It's been in a very strong bull trend, and we're looking to identify a high probability correction using our tools and primarily our external retracements. So from this daily data, I'm going to just put on the regular internal retracements that most of you are familiar with. As of the last bar on this chart, it's tagged the 50% retracement. Well, there's no swings on the daily data that are obvious to make an external retracement from since this high. So we're going to have to go down to a smaller time frame like the 60-minute data to see if there's some swings in here we can make some external retracements from to help identify the end of the correction. So is it likely to complete this corrective low at the 50% retracement? Well, before we go to the 60-minute data, let's look down at our daily momentum, and it's still bearish and nowhere near the oversold zone. So at least with the DT oscillator, this is indicating the market will be sideways to down for several days. So more than likely, this tagging the 50% retracement is not going to complete the correction. But let's go to a smaller time frame, 60-minute data, and confirm the position of this market and whether the market is likely to complete the low around the 50% retracement 62 or maybe all the way down to the 78.6%. The daily data says probably not. Okay, it's reached a key retracement, momentum's bearish. Let's go into the 60-minute data. And this is the same data as of that last bar in the chart. And we can see a market came pretty much straight down. Now it's made some kind of correction. And what I'm going to do, let me just put that retracement on again for you so we can see. There we go. Now we can see on the 60-minute data where it's tagged the 50% retracement. Now remember that daily momentum was negative, and we've got even 60-minute momentum, which is positive, but looks like it's rolling over. Let's just add some bars. Next bar, it made a new low, bearish reversal in the momentum. What do we have now? And I'm going to zoom out so we just look at the relevant bars. So this little set of data in here is the largest correction since this decline began. Now let's do our external retracements and see what we got. Very nice. We've got the one, right as of the last bar in the chart, the market's reached the 127% external retracement. But look at this 162 external retracement is just within a few points, very few points, less than 3 points from the 62% retracement. So we've got a little zone around the 162% external retracement, which is typically the extreme of a corrective low. Let's get rid of that 268. And it's right near the 62% retracement. So more than likely, if this market is making a correction as anticipated, right around 494 to 491.7 or 492, that $2 range is more than likely going to be the extreme of this correction, and we're prepared in advance for that. So let's go ahead and add some bars on here. So far, the low bar, let me just tag that so we can see the price. I'm going to get rid of this 78.6% retracement just so we can see these bars better, is 492.30, just 50 cents above the 62% retracement and just less than $1 below the 162% external retracement. This market, as of this low bar, is more than likely at or very near the extreme of a corrective low, and if it's a corrective low, it should be followed by a resumption of the bear trend to a new high. Let's add some bars. As of the last bar, actually let me go back a bar, as of the first bar of this trading day, we made a bullish reversal in the momentum on a bullish divergence against the new price low. The price low was near what we anticipated in advance would be the extreme of this corrective low. Momentum reversal. Now, this is the last full day's bar we have is December 21st. Let me get to December 21st on our daily data. That's the 20th. There's the 21st. As of the higher time frame daily data, when we just came down near that 62% retracement, the daily momentum, both lines were oversold in a position to make a final corrective low. We go down to our 60-minute data. We've got the signal on the first bar of the next day, and that's 98. We're about $7 from the extreme low, of which we identified in advance would probably be the extreme low of the correction. Why? We had a retracement, internal retracement, very significant on 62, but it was this 162% external retracement that fell near the internal retracement of higher degree that said that's your little zone that should complete the correction. And then we had the smaller time frame, 60-minute bullish reversal momentum. Everything's in place for a final corrective low followed by continued advance to a new high. Let's add some bars on here. And we go higher, 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 higher. And the bull trend did continue on to a new high. Now, remember or keep in mind the whole thought process, the whole analysis process that we did here was we did it all in advance, very, very logical. We looked at our external retracements, have a high probability of targeting the end of a correction or the end of a trend. Okay, the very end of it, the last targeting the last higher low of a trend or counter trend. And then when we look at our other tools like internal retracements, momentum, trend studies, and maybe some pattern studies we haven't talked about yet, when we look at those give us the hook that once the market gets to what we have anticipated in advance to be the high probability reversal zone, it gives us the hook to indicate that yes, indeed, that is going to be the extreme of the correction or the trend. Boy, what great information, and we have it all in advance. Well, I want to show you one more example, and this is an example that's right up to date as of the time I'm recording this tutorial. Now, it may be months from now, maybe even years from now, that you actually listen to this tutorial. So I've been emphasizing throughout all of our tutorials how we do this in advance. So Let me put it on the line here and show you what I think the position of this market is as of today, the day I'm recording the tutorial. This again is the gold market, and we can see so far as of the last bar in this chart, we've got a high that's February 2nd. Is that likely to be the final high of this bull trend that's lasted months? Actually, it's lasted several years, but at least the bull trend coming up from this December 21st low and probably from several months ago. Well, let's put our external retracements on. Oh boy. As of the last bar in this chart, this high was just 20 cents off of the 162% external retracement. Now, external retracements, the 127, 162, are typically targets that complete the final section in a trend or a counter trend. So if we have other tools that indicate that the gold market up from this December low is the final section of this higher time frame bull trend, as of the last bar in this chart, it has hit, which would typically be the extreme price of that higher time frame bull trend. Where's our momentum at? Momentum is positive, but on a bearish divergence with the new high. Again, in our momentum tutorial series, you'll learn about multiple time frame momentums and bullish and bearish divergence. And by the way, you have to be real careful with bullish and bearish divergence and momentum because it's only applicable under certain conditions. So that's today's bar. That's today's bar, bearish reversal and the momentum, bearish divergence on the daily chart. 2 days ago we hit, should be the extreme of this trend price-wise, and we'll see how it works out on whether we've made a reversal and we're going to have a significant decline or not. Just looking at what we've learned so far is more than likely, as of February 2nd, 2006, the gold market has made a top, quite a significant top, that's going to have a higher time frame, larger degree correction than we've seen for some time. So otherwise much greater than $50 down. Now, do you think that's some information that might be useful to you? Right at a time when a market's been bullish for months. I mean, just a wild speculative bull market the past few months, that we're able to pinpoint within a few dollars and a couple days of the high probability top to this bull trend. Now, I may be proved to be wrong, but right now with these tools, that says this is a market to short and not be long probably for some time. We'll see how that works out. I hope it works out good because I just like to have good examples on these tutorials. And of course, every day in our DT reports, we're doing this type of analysis with using a lot of other tools to identify the trend position, probable reversal position. So I've been doing this for now 20 years. In 2006, it's been 20 years I've been writing a report that does these projections and does the forecast and teaches you the trade strategies, specific trade strategies. So let's go on to the final section for a little bit of a review and see how we can even do these external retracements quicker than what I've already showed you.
In Dynamic Trader, we can also use one-click auto retracements and alternate price projections. We can save a lot of time using this approach because we preset all of our ratios and then we click on one thing and it actually shows us the retracements and price projections. We're not going to use this all the time, but once we have a formula that works, we can use it whenever we want. Let's take a look at that.
Well, I just wanted to take a minute to show you another auto price projection routine that's in Dynamic Trader program. I'll give Dynamic Trader a little plug because we do believe it's the absolutely bar none finest program for doing all kinds of price projections as well as time projections and a whole lot more. But we have our little auto routine, and for instance, we can do this with just one click. There's our external retracements, one click. We have our 127, 162. How about the alternate price projections? Again, we didn't talk about those or teach you those in this tutorial, but we did in the first and second tutorial of this series. And there's the 100% alternate price projection we did just with one click. And boy, it's so close to the 162% external retracement that you can hardly read. Let me go ahead and just show you. There's a 100% alternate price projection at 573, 575.30, and then let me just show you it's 574.30 is the 162% external retracement. So let me go ahead and put that alternate price projection back on. And that's as of today's bar. And what I was describing earlier is a high probability to complete the bull trend, primarily based on the 162% external retracement, but it's overlapping with the 100% alternate price projection, and of course we have our momentum reversal. So that's our one-click price projections that we don't even have to necessarily click on the high and the low, and we're able to do those because we have our swing file routine that identifies significant pivot highs and lows. So that's why we're able to do the one click. I'm not going to go through the explanation of our swing file routine on identifying the significant pivot highs or lows, but you can always go to our website, and we have a DT or dynamic trading software tour on there, which shows you a lot of the unique and significant routines in the Dynamic Trader program, and it shows them to you in our screen recordings just like we have in our tutorials. So you can see how Dynamic Trader is really incredible in all of its time, price, pattern, and trend routines, all the unique ones that we have in the program on our DT tour and our website. So thanks so much for coming to this tutorial and studying this tutorial. Remember, do your external retracements. I really hope that you study and learn from all of the tutorials in this price series, because we really build on one to another and add all these different techniques together. And I also really hope that you'll be sure and learn and study on our other tutorial series that we'll have on multiple time frame, momentum, and pattern, and time analysis, and all of the tools that we use to make our trading decisions. Well, in this, started with no wells, okay. There we go. In this tutorial, you learned all about external retracements and their unique application. You learned how we use external retracements to identify the end of a trend or a counter trend in any market and any time frame. This is, again, it's very valuable information to be prepared in advance for trend reversals in those specific, very narrow range price zones which have a high probability of completing a trend or a counter trend. I want to encourage you to use these external retracements in your trading every day, regardless of the market that you trade or the time frame that you trade, and you'll find out how valuable they are. Well, I'm Robert Miner with Dynamic Traders Group. Thanks for joining us, and I look forward to teaching you in other tutorials in this price series, as well as other series we have on practical trading strategies. Good luck, good trading.
Thanks for joining us for this tutorial. In this tutorial, you learn that external retracements are a unique but simple price projection technique to help identify price reversal targets in advance. You learned the 3 typical external retracement ratios, and then you also learned how to make auto retracements and auto APPs. Well, I hope you'll join us for part 4 of this tutorial series, where we're going to learn how we use external retracements to identify the end-of-wave trend and correction target zones. My name's Chad James. I'm the CEO of Dynamic Traders Group. We hope you've enjoyed this tutorial. Thanks for spending time with us, and good trading.